Now, when it comes to payroll taxes, you've said this a couple times, and I think it's worth repeating. The IRS can assess you personally for payroll taxes. Yeah. So if you end up being assessed by the IRS, it can be terrifying. You want to understand how to survive an assessment, and it's called Form 4180 Trust Fund Assessment. The long-winded version is report of interview with individual relative to trust, find, recovery, penalty, or personal liability for excise taxes from Section 6672 of the IRC. That's a lot.
Our old 6672.
Yes.
Yes.
Now, what's interesting about Form 4180 is it's not a form for taxpayers to fill out. It's the Revenue Officer form.
Right.
So the IRS does not put this form on their website, but if you Google the form, there's plenty of people that have put up copies. So you can sort of get an idea ahead of time of what you're getting into. And I think it's best to be prepared.
Right. We like to fill out it out ahead of time. The IRS, the revenue officer can't take our copy because they want to do the interrogation. They want to do an interrogation. Now, something, important to realize is your 4180 might not be against the business owner.
Yes. It's whoever they think is responsible for paying those taxes.
Right. And so willfully and knowingly and willfully, somebody who is responsible. So sometimes they can go after a bookkeeper. And
then the bookkeeper would be personally responsible?
It's happened.
Wow.
Yeah, and here's something to really watch out for. Okay, if you happen to be doing the books, you're in charge of it, and the owner of the business says, "Oh, you know what we'll do? We'll hire this tax attorney, and don't worry, I'll have him pay for you too."
Oh, wow.
Yeah, so it's totally unethical. You can't do that.
Yep.
You cannot do that. Or not attorney, but you'd have like a tax resolution. Somebody who's in tax resolution who's not sort of bound by the conflict of interest that's there, because what's going to happen is that and actually there are attorneys who do this, because I did, so I can't say it's just that, but there's attorneys who've done this, and it's really, really crappy. They basically suggest to the person, well, you might as well take responsibility too. Don't worry about it, no big deal. The person wasn't responsible. Now, what the IRS does is it wants to make as many people as liable as possible. Okay?
Right.
Now, they aren't supposed to collect the tax more than once. Once somebody pays it off in full, that's it. But, knowing whether or not they did that is sort of difficult to come by, and it's just better not to be assessed in the first place. So if you're somebody who you're not responsible, you need your own attorney. Okay. You need your own attorney, and you need to fight. You need to fight tooth and nail to not get assessed that. And you have to understand the revenue officer position is you are. Their default position. This is what we've noticed. If you're on a signature card, that is the most important evidence to them.
Okay.
If they see that, oh yeah, definitely. Signature card means nothing. So what? I didn't write any checks. I didn't do anything. I didn't take this money for myself. So that means nothing, but we know from our experience, like, okay, are you in the signature cards? Oh yeah, I am. All right, the revenue officer is going to say you're liable. Yep. So this is how we're going to have to fight this. And
now, also, you go first.
Also, the revenue officer is supposed to look at your collectability to say, what's the point of, hey, look, here's a bookkeeper. All right, we're going to assess them with a trust fund of $1 million.
Yeah, she makes $14 an hour.
Really? So they're supposed to look at your collectability, and that's another issue you're going to want to get out there too, and just gives you a great issue on appeal. The revenue officer is going to roll over you. Well, you got your appeals, and that's where you have to win. Yep. But you have to set it up to win an appeal.
Now, if you are scheduled for one of these interviews with a revenue officer, is it true that if you do have representation, they can be at the interview, but they can't actually participate? Have you had that experience?
That's not how it goes at all.
No.
Okay. No.
Oh, okay.
Is that really what it says?
Yeah.
Oh, God, no.
Okay.
No.
So you can?
Yeah. Well, okay, answer it, and I'll say asked and answered, move on.
Okay.
That was not his answer. His answer was this. Put that down.
Got it.
So you say, nope, that wasn't it. Yeah, of course. What do you think we're doing there?
Yeah.
Just looking pretty?
Yeah, well, sometimes.
Yeah.
So the IRS Revenue Officer who's assigned to the case, he investigates the signature cards, the bank statements, and then interviews with anybody they think may be responsible. So there could be a plethora of people that they're going to interview to try to figure out what's going on. So what's the best tips then? Be prepared, get representation.
Yep.
Maybe review the document ahead of time.
Yeah, know which way it's going to go, and just know that they're going to ask you, and that you're having people who aren't used to being cops. But it's actually easy to be a cop, because go try it yourself.
Right.
Go try to somebody who you have some leverage on. Give them the business, and you say, oh yeah, it is kind of easy to do that.
From your experience, do you find that the taxpayers are treated differently if they're represented or not represented?
Oh God, yeah.
Yeah. Okay. It's usually the case.
Yeah, I mean, because we know, completely different.
And you're used to, do you deal with the same revenue officers? I mean, is there a group of them like in a certain area?
The revenue officers will be around the country.
Okay.
So we'll deal with them. We deal with them around the country, and it will be a certain level of revenue officer who's going to be assigned this. When a revenue officer first comes up, they're not involved in trust fund cases, and that's why a lot of times when you're doing a trust fund, you'll have a younger one sitting in for training. So you have two revenue officers, which is kind of fun because you're educating the younger one, and the older one's getting sort of, no, here, this is how you do it. Hey, you want to do your job right? I want to help you out, which I do. I'm like, look, don't waste your time. You're going to, here's some ropes. I'll help you out so that you don't get burned out of this terrible, terrible job that they suckered you into.
Yes.
So we could, so that's a fun dynamic when you have a younger one.
And then last but not least, how does embezzlement affect this?
Yeah, embezzlement's something, right? You could be running a business, great business, and you're like, oh, everything's going great. And then one day, bank account's levied. What? What?
I just bought a new jet ski.
What is going on? And so what it is that your person who did have signatory authority was diverting payroll tax deposits to other things. All the notices coming from the IRS, you open up their desk drawer, there they'll be, right?
Okay.
So you had no idea, and the money was leaving your account. So as far as you could tell from your books, it was like, oh yeah, everything's being paid, everything's being paid, right? So there's nothing, yet the money is embezzled. And that is something that happens. And those are fun cases to work, because the assumption is that, well, you know what, the employer is going to be on the hook for that.
Oh,
yeah, right.
Okay.
So the IRS is looking to assess the person who was stolen from the trust fund recovery penalty. So those are fun cases, because that's not necessarily true, because they're like, whoa. Yeah, I was responsible, but look, I did my due diligence. I checked to make sure it was paid, and my books were like, yep, all paid. This person stole from me, get it from them. And that has worked.
That
and
makes sense.
those are fun. Now the business still owes it.
Right.
But the nice thing, and this is what's sort of nasty about the trust fund cases, is that you'll have a situation like this. We're in some sort of collection alternative for the business. Okay, like, okay, we got to reach an agreement. Now the trust fund assessment was done, and it's assessed against a liable party. A lot of times, most of the times it is the business owner. Now what happens is a new revenue officer comes to say, hey, you owe $80,000 in trust fund penalties. You need to collect it. You're like, well, idiot, I just got into agreement with you to pay that. Oh yeah, that's somebody else. This is the trust fund. And so now you have to do another solution. And it might just be like, well, I'll pay you $100 and the business will pay off the rest.
Yep.
So it's something like that. Or you might be able to do an offer and compromise on it, or installment agreement, or something else. But that's something you always have to think about when you're going to one of these. Is like, we're not going to be done when we're done, because these guys are going to come around. Well, and the thing is, they need to assess that the trust fund within 2 years, which you're pretty good at. And so and this is what I don't understand. It's like, well, you've already assessed it. If the business stops paying it, then I would think you would go. But I think it's back to if it's not paid within 2 years, they don't think they're going to get it. So they're like, they're now they come to your house, right? They were just at your business. Now they come to your house like, honey, what was that about?
Don't worry.
Yeah. And they actually will go against, that trust fund will go against both.
Oh, the spouse
if you file joint, you could get it undone.
Yep.
But it's just like, what the hell is that? So it's extra pressure. Oh, all right, I'll just dip into my 401k and pay it off, something like that.
Oh, okay.
And so now you created a new liability with their 401k.
Yeah.
So that's really not, that's why you want to have, these are just some of the nastiest things around. The stakes are incredibly high. For a business, this is worse than being sued. Payroll debt is worse than being sued by your worst rival customer.
Yep.
Really what's on stake, these can go on forever. The IRS, something else they do is they do things they're not supposed to do. Let's just say that you have the money, you don't have a cash flow issue, but for some reason or other, one payroll deposit was missed. It just was missed, but every other one was boom, boom, boom on time. This is what the IRS does. They'll say, no, we're not going to give you one late payment, because you missed one or one missed payment. We'll give you all the late payments. We're going to say we're going to count your week 2 as week 1, and everyone that it's a cascading penalty. And they're told not to do that, but they do it anyway. And you can get it undone, but that's just what you're dealing with.
That's insane.
Yeah, like oh my God, wow, it's like I'm from the government. Oh, I should trust you. And Congress has told them not to do it.
Yep.
They do it anyway, and you can get it undone. But a lot of people just
they don't know.
So
they don't fight.
And there's a whole divisions of some of the big accounting firms. That's all they do. They just do, cascading penalties here. We can get it undone.
Yep.
The IRS hasn't fixed it because people mistakenly pay what they owe. So that's really what you don't want to do.
All right. So payroll tax problems, a big deal, but there's hope.
Oh yeah. And now we didn't talk about, sometimes the solution is what you don't want to hear. Because that personal liability is just growing as your payroll tax problems growing, and it's not dischargeable in bankruptcy. Why do you want to put yourself, deeper in the hole? Sometimes you say, okay, look, something happened. It's okay to shut down and rebuild. That's something you have to be comfortable with doing. So sometimes that's the solution too. That's okay. And you can restart, and there's ways to do that. Where the IRS will let you do that a few times, let you do it at least once.
Yep.
And it's like, as long as you get the trust fund paid, that's really what they're concerned about. The other part, you'll get it. And the penalties, if they don't get it, they're not going to be terribly upset.
All right. Awesome. Good to know. IRSMedic, the law offices of Parent LLP, real tax attorneys for tough tax problems.